let's get right into today's explainer. We are breaking down some massive overnight global macro shifts and delivering the precise technical levels you need for your trading screens today. Whether you're actively trading the dollar, tracking Asian FX, or navigating Indian equities, we have got a completely packed data docket and some frankly huge technical breakouts to cover.
So the absolute shocker overnight came from Fed Chair Kevin Warsh. In his very first meeting as chair, he essentially took the central bank's communication playbook and just tore it up. By refusing to submit a dot plot, openly questioning the value of forward guidance, and launching 5 brand new task forces, his message to the markets was crystal clear. You better brace for uncertainty.
And because of that, we are seeing these dual, colliding forces driving the market today. It's really like two tectonic plates smashing together. On one side, you have a fiercely hawkish Federal Reserve holding rates sticky at 3.50% to 3.75%. But on the exact opposite side, we have collapsing Brent crude slipping below $79 a barrel following the news of a U.S.-Iran interim peace agreement. So those geopolitical risk premiums are vanishing right at the very moment the Fed decides to turn up the heat.
Section 1. The dollar breakout.
Now, we absolutely have to talk about this level 100.25. The dollar index just smashed right past it. This was a heavy psychological resistance line that hasn't been conclusively broken since that initial Trump rally. And make no mistake, Warsh dropping forward guidance was the exact catalyst that fueled this aggressive upmove.
Looking at the technicals, the DXY has established a rock-solid buy-on-dip structure. You're going to want to watch for support down at 99.64, but honestly, that previous 100.25 resistance is now acting as a really firm floor. The immediate tactical target on the upside, we're eyeing 100.57.
Section 2. European and UK setups.
You'll want to keep your screens super active today because we've got a massive data deluge coming in. For the soft points, we have the ECB's Elderson and Lane speaking. Over in the UK, keep a close watch for crucial labor data, plus the Bank of England's rate decision and press conference, which, remember, follows that unexpectedly flat UK CPI read at 2.8%. Oh, and we also have Japan's CPI and the BOJ minutes dropping, so it's a remarkably busy session.
Now, the euro has quietly bled 3 big figures since mid-April, finally finding some support around 1.1483. Right now, both EUR-USD and cable are presenting some pretty starch sell-on-rise setups. For EUR-USD, your resistance sits up at 1.1612. For cable, you're watching resistance at 1.3326. Keep in mind, with the DXY sitting at such a major pivot point, today's Bank of England statements could very aggressively trigger these directional setups.
Okay, moving to Section 3, testing the Bank of Japan's resolve.
The dynamic playing out in Japan right now is just fascinating. Even though Japanese policy rates are currently sitting at 30-year highs, the BOJ retains a tightening bias without actually indicating a faster cycle. And that specific dynamic leaves Japan stuck with the lowest real rate in the entire G10. Now, those initial rate hikes left the yen pretty unmoved, but this sudden aggressive surge in the US dollar completely changes the math.
Those comments from Warsh really jolted USD JPY right out of its tight trading range. We're currently trading above a key support band of 159.77 to 160.55, which signals a very clear buy on dips trajectory. Basically, the markets are actively daring the BOJ to step in and intervene, and traders have their eyes locked firmly on a target of 161.93.
Which brings us to Section 4, India, crude relief, and equities.
The Nifty literally roared past the 24,000 mark as bond yields sank to 2-month lows. It's like everything is suddenly aligning. Falling oil, rising equities, and lower yields are finally reading from the exact same script, pricing in a much friendlier macro backdrop for India right now.
Driven heavily by the Nifty IT and bank sectors, the overall structure remains a very strong buy on dips. Immediate support sits right at 23,900, with your secondary support checking in at the 50-week moving average near 23,710. The bulls are in control here, with their eyes set firmly on that 24,344 target.
Switching over to the currency side, though, we've got a bit of a mystery. USD/INR hit a 6-week high of 94.29 before robust corporate dollar demand stepped in and triggered a brutal reversal, ultimately closing at 94.52. It really leaves traders asking a tough question today. Did that weekly support just completely vanish?
So, unless the market throws us an absolute googly today, the rupee is sitting at a really critical juncture. You've got to watch the 94.77 pivot carefully. Resistance is capping things at 94.92, while support is layered tightly at 94.51 and 94.06. It's definitely trying to stabilize, but this broader Asian FX weakness we're seeing is keeping the pressure on.
Well, we have seen some absolutely massive breakouts today, all fueled by central bank surprises and rapidly shifting geopolitics. I want to leave you with this thought. If the Fed has truly killed forward guidance for good, are your portfolios actually braced for the volatility of trading in the dark? Seriously, think about how these setups might react when pure guesswork becomes the new market standard. Keep your risk managed tightly out there, and I will see you in the next explainer.